Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Market Analyst at FX Pesa. So today, we'll be looking at the current events of the markets. So we'll be starting by the economic calendar, trying to understand what are the key events to expect for the day. Apologies for that. And once we go through these, then we also look at technical analysis of the major currency pairs. We look at gold as well as oil. Then we cover indices. Once we do these, free everyone approach the day from an informed perspective. So if you have any questions, feel free to type that in the live comment section, and I'll be ready to respond on the go. So let's begin with a quick test by audio. So if you can hear me clearly, can you type hi in the live comment section? And these will confirm that everything is working just fine. So one of the key highlights is that there is a lot of anticipation in the US stock market as Netflix is bound to report its quarterly earnings. That is the fourth quarter of last year. And this will be happening after market close. So that would be at around 11 p.m. And of course, you will not be able to participate in trading Netflix shares after the announcement. So the big impact is expected to be in the markets tomorrow. So, however, it's quite a common approach that some investors may consider trading the stock before the announcement. And in that case, if the analysis is right and there's a big jump, they benefit from that. And of course, if the analysis is right and let's say there is a market drop, they can also benefit from that. So Netflix is set for its fourth quarter earnings on Tuesday, that's the day after market closes. And the expectations are that the streaming giant ended on solid footing. So new subscribers in the quarter are expected to surge by another 9 million or so, according to the company's guidance. That suggests a full year 2023 net additions will sit around 24 million. Investors will also continue to assess the company's revenue initiatives, like its recent crackdown on password sharing, its ad-supported tier, in addition to the recent price hikes on certain subscription plans. So those are three major factors or events that have happened with Netflix over the last quarter. So cracking down on password sharing would be expected to increase the number of subscribers. Then it provided a certain number of tiers where some subscribers who are paying a lower amount of dollar subscriptions get ads on their Netflix. Then the last one is recent price hikes on some of its plans. So Netflix film Chief Scott Starber will exit his position in March. The company announced late on Monday, which may garner investor attention as well. So Netflix revenue initiatives should help boost profitability metrics like free cash flow, operating margins, and average revenue per member, what for the ARM. So the company previously said it expects full year 2023 operating margins to hit 50%, which is the high end of its previous forecast between 18 and 20%. So ARM, however, will likely continue to be weak in Q4 before picking up later this year as both the ad tier impact price hike effects take hold. So here's what Wall Street expects according to Bloomberg consensus estimates. So we'll be looking at revenue, which is expected to have increased to 8.71 billion. Then earnings per share of $0.20 per share, and the number of new subscribers to be around 8.91 million. So clearly, you can see that Netflix has been doing quite well over the last 6 months. And this is up slightly. Then if you look at the year-to-date performance, this is since the beginning of this year, then the stock has gained around 0.57%. So in the last 1 year, for the performance, this was a quite big increase, having started the year around $363 per share. And today it's trading at $485. And this is the very close to the performance, to the best performance of the year. So it will be a very interesting stock earnings to check out. Of course, there could be some possibilities of increased volatility and potential spike in price as a result of the earnings report. So besides that, early this morning, we had news coming in from the Bank of Japan, where it made an interested decision to hold interest rates at the current level, but then that was largely priced in and expected in the markets. Then the focus was whether the Bank of Japan would be considering hiking interest rates in the near future. So a lot of expectations were not met, and we saw some increased volatility in JPY pairs. So looking at this article from Reuters, Japanese shares surged to fresh 34-year highs as the Bank of Japan stood pat on ultra-loose monetary policy, while Chinese stocks struggled. Speculation of a huge rescue package from Beijing underwhelmed investors worried about the shaky economy. So European markets are likely to open mostly flat, with Euro Stoxx 50 futures up 0.1%, SP 500 futures were flat, although Nasdaq futures gained 0.1%. So we'll be looking at that shortly. So from the economic calendar, you can see the outcome here. So interest rates remained at the same level at negative 0.1%. This has been the same story for years. Then the Bank of Japan core CPI came in at 2.6%. So this was a slight easing from the previous number, which was 0.7%, but then way above the Bank of Japan's target of 0.0%. So from the comments we saw from the Bank of Japan Governor Kazuo Ueda, there's quite a number of highlights. We'll try to go through each one of them. So expect the Bank of Japan to collaborate closely with government, implement suitable monetary policy to achieve its price goal sustainably and stably while supporting wage growth. So one of the key goals for the Bank of Japan is to support wage growth, and it has been really struggling to achieve that. So services inflation shows gradual rise, even after excluding obviously temporary factors. So that's according or consistent with the Bank of Japan. So Ueda expects accommodative conditions to persist for some good time. So more data available at April policy meeting compared to March. So by saying that he expects accommodative conditions to persist for some time, he's basically saying that the Bank of Japan will continue printing more money in what process we describe as quantitative easing. So with the ultra easy monetary easing in Japan continuing into 2024, it means that the same trend we have been experiencing for the last 2 years may be expected to continue this year, where the Japanese yen continues weakening against other currencies. More data available, April policy meeting compared to March. So the Bank of Japan Governor Ueda anticipates moderate consumption growth continue after spring thanks to wage hikes. So positive outlook might allow for policy change despite negative real wages. So clearly, from some of these comments, you can see that the Bank of Japan is not looking to change or alter its policy. And as a result, we expect to continue seeing the Japanese yen weakening against the currency. So as for the economic calendar and the remaining events for the day, we don't have any major event coming up. So after the Japanese news, we saw the public sector net borrowing data from the UK, which basically showed a drop of 6.8 billion pounds, down from the previous reading, which was 12.8 billion pounds. So clearly, the public sector is borrowing less, and these should basically show the tight conditions currently with the market. So we'll be looking at the National Housing Price Index in Canada, and this will be at the New York Open at 4:30 p.m. And I will take some time to process this. And at 4 p.m., we'll be having another session where we discuss the New York Open. So we'll have more data coming in from trading activity during the London session. So as we approach the New York session, we'll have more analysis to cover on this. So we'll also be looking at European Consumer Confidence Survey, and this will be at 6 p.m. Of course, Richmond Manufacturing Index for the US at 6 p.m. So slightly I'd call these medium impact news. So we don't expect much activity to be coming in from these. So for the day, it is safe to assume that the news that will be dominating volatility for the better part of the day is the early morning news coming from the Bank of Japan. So after midnight, we'll be getting news from New Zealand covering the consumer price index, a measure of inflation in New Zealand, which will be a key input to the next decision by the Reserve Bank of New Zealand. So this is expected to bring in some much needed volatility in New Zealand dollar pairs. So then, of course, as we mentioned yesterday, for the better part of tomorrow, we'll be focused on S&P Global's flash manufacturing PMI as well as services PMI for various economies, including Australia, Japan, the Eurozone. We'll also be looking at the same for the UK as well as for the US, with the biggest news of the day being the Bank of Canada monetary policy report and interest rate decision, where the Bank of Canada is expected to hold interest rates steady at the current level of 5%. So that being mentioned, now looking at the charts and trying to understand the key market trends, one will be starting with the dollar index, which has been ranging for a while. So we can say that the dollar index has been moving up or down. It's more of a flag formation. This has lasted for the last 4 days, and now we are entering into the 5th day of this flag formation. So it's similar to the area range that we saw at the first weeks of the year before breaking out and forming this flag. But then at the same time, we are lacking in terms of key market drivers. And the biggest news for the US dollar this week means the core PCE price index, which will be released on Friday. So that is expected to bring in some much needed volatility in the dollar index. So at the same time, know that the biggest weight in the dollar index, that is the currencies that are used to formulate the dollar index, the biggest weight comes from the euro. So the euro will be having big news this week on Thursday that the European Central Bank is expected to announce its interest rate decision, as well as present the ECB press conference. So that will also bring some volatility in the dollar index. So knowing what we know, we can already see that the better part of the early morning trading, the dollar index was losing. But then in the last 1 hour, it managed to make a comeback and is now proceeding higher. So as we trade for the day, we should be having in mind that the dollar index was weak, but now it's recovering. So after the JPY news, you can see the Japanese yen strengthened for a while as the Bank of Japan Governor Kazuo Ueda expressed concerns about the exchange rate of Japanese yen and also cited that they are looking closely into the Forex markets, and that basically implies that there's a good chance they might consider supporting the yen, and this is something they've been doing for quite a period of time. And every time the Bank of Japan has intervened in the currency market, it has led Japanese yen strengthening against other currencies. So this happened in the month of November and December, but then January, we have already seen a very strong recovery in the dollar against the yen. So despite the small pullback we are seeing here, the fundamentals remain the same, that the dollar is pretty strong and might continue in that direction. So in this case, it's a much welcome pullback, and we could be seeing more of these as we proceed with the week. So in this case, there's this assumption that this trend line will continue holding, trying to make it more accurate. So if you go to a smaller time frame, say the H1, you can see the number of times that the USD JPY has bounced along this trend line. Then the big spike today just got to the same trend line, and now the market is bouncing strongly from this level. So there is a good chance we will be seeing some further upside happening in this pair. So this pullback is very much welcome. So anything around this yellow rectangle might mean we start looking for potential bullish positions. So for Euro USD, it has managed to make a very impressive rally, and this is since morning. So yesterday's projection was that the euro was going to continue weakening against the dollar. But then what we are seeing here is that our projection was right, but the market did not get to the target. So from morning, it kept going up, and now we have met yet another resistance. Now it seems like another opportunity for a short selling trade. But then the targets have changed. Now we have a new low. So it may not make sense to project all the way back downwards. So perhaps the day's low is the new target rather than the previous target all the way down. So for pound USD, it's the same thing. So a very strong correlation with what's happening with the euro. So market goes up, hits a very strong resistance. And now the market is on course to form what looks like an inverted star, or what we call an evening star. And now the market is moving back downwards. And as the dollar index strengthens, then there's a good chance we could be testing the low of the day, which is around 1.27029. So for USD CAD, we are seeing a continuation of this trend. So from the 1 hour chart, you can see how the dollar was pretty strong yesterday in the evening against the Canadian dollar. So already this morning pulled back downwards, and now we are seeing signs of continuation. So in this case, there's a good likelihood that we see the market making a comeback and erasing all the losses we had seen earlier. So potentially hitting a previous level of 1.34859. So that's a very interesting area to be observing as the market pulls back upwards, and the target is along this highlighted area here, which has been critical in trading this asset. So if you manage to break this high, then we also have another high for the week or for last week, which is 1.35381. So gold, on the other hand, managed to make a big spike. And now that we are seeing a strong dollar, there is a strong rejection of that level just above 2034. And now what we're experiencing here is a reversal, and we could be seeing gold continue weakening and move back to the 2017 levels. So as for AUD-USD, we managed to see a strong bullish momentum. So all of them they seem to be pretty much the same. So failing to get to the previous target here, which was at the key decision point at 66454. What we are seeing here is the market forming a new level, which was formed yesterday as a high, and today is being tested again, which implies that there's a strong resistance around this area. So as a result, the market failing to break this area, get back downwards, then it represents a potential opportunity, market back downwards, and now retesting yesterday's, the previous day's low, which was Friday. So this is the lowest price you saw on Friday. It was also today's low. So now we expect to see the market dropping back to this area. So as for US equity indices, after making a very strong rally last week, we are seeing the market really struggling to break into new highs. So after the price action activity we saw yesterday, then we are seeing some form of reversal out of pressure coming in. So there was a big drop in the afternoon hours of trading yesterday. And now we are seeing something similar happening. So for the better part of the day, the market was not doing anything, just going sideways. Now, as we enter the London trading session, then overall you can see momentum coming in, the market breaking down to the lower side. So for very short-term trading, it seems likely that the market is headed lower, and we could be seeing some other downside momentum coming in from the Nasdaq. So in terms of targets, it's an all-out drop. Then we look at the most recent support or resistance levels, and this seems like a likely target if the Nasdaq was to make a big break downwards. So there is a good chance we could be seeing the Nasdaq making a big drop from here going forward. So as for the US 30, or what you call the Dow Jones, it's pretty clear that the market is moving sideways. Then whenever we have this, so the idea is usually to monitor that area and see whether the market breaks to the upper side, like we are seeing here happening on the Nasdaq. So if you highlighted this area, then you could clearly identify the break. So we don't have a break in the Dow Jones. Then for the S&P 500, yes, the market is attempting to go for the break. It doesn't seem all that confirmed to me. So be more patient and waiting for more signs to show me a clean break. So oil was extremely bullish yesterday. So we had a very strong rally. So after shorting the market here, targeting this area, the market dropped slightly above half, got to this area and found support, then changed direction and made the rally all the way back. But then once we got back to the same trend line, you can see the market getting rejected. Now this morning's rally has also met some form of rejection. And now there's a potential that the market could be changing direction from here. So remember, for the last 2 weeks, we've been looking for short selling positions whenever the market goes up. Having broken this sideways range or momentum, then there's that potential that the market could continuously move higher, but then it's not that convincing. This is a trend line that has lasted for quite a bit of time. And now that the market is testing it, there's a good chance we'll be seeing some form of reversal happening here. And the potential targets may likely be yesterday's low. So it's something to observe and see how these candlesticks close at the top of the hour. So European equity indices made an impressive rally in the morning. Then from what we are seeing, the current price level, it's a very strong rejection of this level here, which has acted as a resistance for the last 3 days. So on Friday, market was unable to break. Then on Monday, does the same. Then today being Tuesday, we are seeing a very strong reversal here, which leads to the expectation that the market now moves further back downwards. And now the target moves a little bit lower to the previous low that we saw on Friday, and that's around 7,350 for the French 40 index. So for the European or the Eurostoxx cash 50 index, it's the same thing, market rejecting a very strong resistance and now moving back downwards. And if Friday's low is anything to go by, then this is the target. So around 4,436, you can already see the strong momentum coming in from the short sellers. So in this case, there's still more room for downside. So Bitcoin continues being weak, and this is something we covered yesterday. So a break, a retest, and a continuation. So there's an expectation that we keep seeing lower prices. Our first TP level was around 40,220. And since that was broken, now the next target becomes 37,954. So I expect this bearish momentum to continue today. So for New Zealand USD, we had a break yesterday. Market got back above the support line. But then this attempted break is a signal enough to show that there is a stronger likelihood of the market breaking below. Of course, now we are seeing lower highs as well as lower lows. So there's a good chance the market keeps dumping. So for the dollar, trading against the Swiss franc, very strong recovery, similar with what we saw happening with the Japanese yen. So the market is making a good recovery after this big sell-off. Now, target is for the market to test the previous high. So 0.87015 seems like a likely target for anyone who's looking to take advantage of the dip right here. So as we approach the end of the presentation, I think equity indices, especially in the Eurozone, seems like a likely target to go for short selling positions. So if I was to select a chart of the day, there's a likelihood it would be between the Euro 50 cash index and the France 40 cash index. So the France 40 cash index seems like a clear signal to me. So a good chance that the market heads lower from here. So for the UK 100 index, also something similar is expected. So after struggling to make this rally, current 1 hour candlestick is indicating a rejection of higher prices. So also a signal that there is a very strong entry by sellers, which likely might extend towards the rest of the day. So we could be seeing some further selling happening in the UK, would say 100 index. So hello, Billy. Hello, Nzomo and Juguna. Hello, Rosaline and Oscar. Thank you guys for joining the session. Hello, Walenga and Edward and Gitao. And good morning. So I'm seeing one question only for the session today. Is it possible for a strongly persistent trend to shift without an event of high impact news? Yes, it's quite possible. So mostly whenever trends change, it's as a result of the change in the belief in the markets. So markets are driven by beliefs. So it's what investors believe about the market that leads to action, whether they are buying or selling, and that action leads to movements in price. So know that fundamentals have an impact on beliefs. If there's a fundamental news that was reported somewhere, might change the beliefs of the participants in that market, and as a result, have an impact in price. So in this case, whenever you see market prices changing, sometimes it's just the belief changing. That could be across various reasons. It could be news, it could be taking profits, identifying a price level and seeing that at the top, bottom, and so on. So yes, it's possible for market change a consistent trend without a shift in a high impact news. So for instance, we saw the the Japanese yen strengthening late last year. But then after it strengthened, since there was no fundamental news backing it up, eventually it continued losing to the dollar. So if you look at USD JPY right now, I'll try and show you this. So from the daily chart, you can see November and December. And this was a likely profit taking coming in from the market as people took advantage of all the gains they had made for the better part of the year. So you can see from January, the market consistently moving up, but then profit taking here, moving up, profit taking, and almost forming an all-time high. Then the market goes back. But then if you notice where the market changed direction, there was no major announcement, but it was a major resistance level. So the beliefs were possibly changed as a result of the market hitting this resistance level. So nothing contributed to this. But then you can see the market recovering and regaining the original trend that we had for the better part of the year. So now this January, the market has recovered December's losses and it's en route to recover the November's losses. So this pullback is likely to cause or bring in an opportunity for the bulls to continue adding more positions, that is, buy positions for USD JPY. And we could be seeing a new leg stemming up from this support, the market moving higher from here onwards. So that's it for the day. Thank you very much, guys. Hi, JSCode. And I hope to see you on the next session. Remember, the next session is happening at 4 p.m. So set a reminder and you will be notified once the session is live. Thank you, guys. See you then.